Welcome on board then, Amit Jeswani from Stallion Asset. Amit, hi, afternoon. Just looking at the prospects of ADAG names. Sanjay Dutt from Quantum Securities does believe that Reliance Home Finance and Reliance Capital still have fundamental value in them. Would you go with any of the ADAG names?
Aisha, the thing is that, hi, thank you for having me on your show. Good afternoon. The thing is that you play Reliance Capital, Reliance Home, and the bull market is at the end phase. We are at the start of a major rally. So you want to be in quality stocks that will grow at 25-30%. You need certainty of returns now. So you typically play these low quality stocks when you're at the last phase of the bull market, typically the wave 5. So that is when you play the Reliance Capitals and home finance. So I would not. Now is the time to be with leaders, strong growth companies, good ROC. So we are positioned that way.
Where do you see that leadership within the banking space, Amit?
Banking is an amazing space. See, banking and consumer, these are two sectors where you think about it. ICICI Bank had 10% NPA till last year. Even then the stock is hitting new lifetime highs. So financials and consumers are one space which keep getting better with size. So in financials you have there are times when you want to be long your gold finance companies, and there are times like we are very bullish on microfinance as a space right now. We've been adding stocks out there like small SFBs, the new merger which has happened. So a lot of stocks in financials look good. Axis Bank's there. So this whole theme of private financials, see, private financials gives you beta, and consumer won't lose money if the market goes down. So if anyone has a portfolio of private financials and consumer, in a bull market the financials will do very well, in a bear market the consumer stocks will save you. So a typical portfolio of these two sectors does extremely well throughout market cycles. See, the horses keep changing in financials. Last bull market from 2013 to 2017, it was your housing finance companies and those kind of bets that were doing well. In this time, if you see, it's going to be your private financials again. At some point of time, probably your PSUs will also join the rally. So we don't have any positions in government stocks. We don't buy government stocks, but it looks like that stage is getting built up because NBFCs are not able to grow, and NBFCs are 25% of the market. So probably there'll be some delta trade which can happen in PSU banks, but you have to have Kotaks, HDFCs in your portfolio. There's a large opportunity size, and these guys are just getting better with size. So only a few business models get better with size. Most companies, construction companies, airline companies, steel companies, they get worse with size. But a financial services company like HDFC or Kotak or those kind of stocks, they get better with size. So Bajaj Finance, so we always have those kind of stocks in our core portfolio.
To the safe bets, but we'll question you about a lot more, Amit. For now, we're just taking a short break. Do stay with us. A lot more market talk coming up. This is Closing Trade.
Amit, just on the topic of banks, we are seeing a big roaring move in a Union Bank, in a PNB, in a Bank of India. In addition to what you've already said about banks, do you think that the rally is going to spread to PSBs, and are they worth an investment, or do you think these are just trading bouts, what one is seeing?
Aisha, humans imagine and markets discount. Today, everyone wants to buy a dip, but the dip is not coming. Waiting for a relief rally in a bear market to sell the stocks you own, and waiting for a correction to buy the stocks you want to buy in a very strong bull market doesn't actually pay off really well. The thing is that markets have now started discounting until the end of May, like till basically May. They will keep going higher. The stocks will keep churning. Like example, if now the rupee has given a breakdown below the 69 level, so now the rally will slowly move towards your small caps and mid caps, and mid caps and small caps can go up 10% next month. So that's how strong this wave will be. It's going to go from extreme oversold to extreme overbought. So typically that's how, as long as the rupee stays like at below 69 to 20, that's the whole idea here. So all these small banks, PSU, Kachra stocks, all these stocks can do well for the next 1-2 months. By May, once it might be a buy on rumor and sell on news kind of market. So by May, you then have to go back to your top 20-30 stocks. You can do all the kind of trading you want to in this kind of bull market. But then after May, you have the markets are going to chase quality, growth, and the same things, high ROE, leadership. After May again. So these 2 months you can trade PSU banks, Bank of India, PNB, whatever. But after that you have to get back to your HDFCs and your Kotaks and all those kind of. See, quality name is the only place where you can make money and retain money. A lot of small cap investors made money in 2017, but they had to give it back. Money doesn't get retained in small caps, so you have to trade them in and out. So that's the whole thing. So after May, we'll get back to your Dow Jones, your MSCI, emerging markets, and all those things. Till that time, it's a very strong rally, and let's just enjoy this rally.
Kunal, just wanted your thoughts as well. A big move coming in today on a Bank of India, a Union Bank, a PNB. Does it look like this move is sustainable?
So I think, no, I would not say immediately, Aisha, but maybe I think for the next couple of days you might see these stocks sort of, facing some resistances, because now I think on the hourly charts, I was just looking at many of the indicators, they've gone way beyond what is the overbought levels for indicators. So maybe from an immediate perspective, you might see the stocks, facing some resistance. But structurally, I believe that many of these PSU banking names, especially Bank of Baroda, Bank of India, etc., I think they are finding some very strong, reversal patterns. So maybe whether these are first set of stocks which are rallying, out of the banking names, or the second or the third ones, difficult to anticipate. But nevertheless, I think this is a very strong trend in making on the longer term charts for many of the private PSU banking names. So I believe as a short term trader, you can probably look out to maybe buy selective names like a Bank of Baroda, etc. But on a positional basis, on an investment basis, I think the case could be ripe for much higher returns even from current levels.
Amit, you've been fairly bullish on sectors like steel, real estate in the past, and it's an interesting time. We're starting to see somewhat of a resurgence in favor when it comes to some of these extremely beaten down pockets of the market. Where would you find value? Would there be specific names? Are you still bullish on these trends?
Absolutely. Real estate is an extreme long-term trade for us. So right now, let's say a Godrej is doing like 1,500 crores a month sales, and this is a down cycle. So you need to buy the leaders here. I'm not bullish on real estate overall. 90% of builders will go bankrupt, but the 10% builders will become really, really large. So I'm just giving an example. We might have vested interest. Godrej Properties is doing 1,500 crores of sales in a down market of real estate. When the up market comes, these companies can actually scale up to a lot larger companies, and it's a negative working capital cycle business, and brand is the thing that is working now. So Mohan Builder, a Sham Builder, Ram Builder, those builders cannot pre-sell. It's going to be the Godrej kind of companies that will pre-sell. And think about it, Godrej knows how to create market cap. They created 80,000 crore market cap out of killing mosquitoes, on Godrej Consumer. Of course, they're into hair care and all other things as well. But Godrej knows how to scale up a business. So those are the kind of companies you want to bet for long term, and this will do extremely well for next 3, 4, 5, 10 years. So it's a very long term trade, real estate, but we are very bullish on it. We hold it in. We might have vested interest here.
There's been a lot of debate and conversation around, playing up whether or not, certain names in the market are currently underperforming versus whether or not earnings growth can genuinely catch up to the kind of price movement we're seeing, especially in the run-up to elections. Which side of the fence would you lie on?
I am very bullish till elections, and after that, let's see what happens. Because see, the same old 20-25 stocks will do well. The high growth, high return on equity leaders, those are the stocks you buy. Other stocks don't make you money.
Okay, so you're sticking with some of the quality bets. That's the take coming in when it comes to your market outlook. But, you can't miss out on the mid-cap rally as well. We have seen a significant pickup. There are names that you're getting at, respectable valuations which have decent upside. I know you've touched upon banking, real estate, even consumer as a theme. But is there any sort of a contra bet or any sort of an offbeat idea that you would be betting on, or space that you like for the long haul? Could be like agri, fertilizer, tea companies or something like that?
We have nothing like that in the portfolio. See, we're looking at auto again. The markets are pricing auto according to growth rate. Let's take Hero Honda. Hero Honda will grow at 5% and markets have priced Hero Honda, let's say 15p multiple. Markets were expecting Maruti to grow at 15% and markets were pricing Maruti at 33p multiple, right? Between 30 to 35. Of course, the last few months, the growth has been extremely poor. In fact, they're degrowing at 8-10%. So at some point of time, these stocks will have to come to like 20p or something like that. So that's the time, because at 20p the expected sustainable growth rate for the market for Maruti or an Eicher motor would be somewhere around 8-9%. So basically those are the kind of bets we can look at if I want to be a contrarian. We're actually not contrarian. We buy companies that are growing fast and showing good price action. So those are the kind of companies we buy. For now we are financials and consumer and some real estate. We already have some infrastructure, but that we don't recommend that. Yes, so those are the 4 broad sectors that we are invested in. And let's see, after election, you want to be more into quality, not into the mid caps, because we will start following the MSCI EM again. And those 20, like look at Reliance, look at the price action what Reliance is showing. You have 30-40% growth in Reliance, the stock's hitting new highs. The management knows how to scale up a business. Look, they are growing the retail business as 100%. The Jio is growing extremely fast, and it's a next-gen business. So those companies can be leaders of the bull market, and they will do 30-35% kind of. They might do 30-35% kind of compounding. Let's see how we play. But for now, I'm going to come back to your show and tell you if I'm going to select a sector. But for now, it's just consumers and financials.
Fine, Amit, we look forward to that. But let's pause on that market conversation for a moment. We've got a big 18 hour exclusive for you, just to show
Exactly, you're seeing the market headed in terms of the big election event as well coming up. What exactly is your stance? Do you have any particular targets in mind?
I'm looking at, see, if till the time your rupee is below 69, you might see a surprise 66 kind of move towards the dollar. Basically your dollar will head towards 66. It's gonna be very fast. It is basically a repeat of what happened in 2014. What sectors to buy? It's gonna be the same stocks actually. You look at stocks which are gonna grow at 30% plus. There are only a few 30-40 names actually with good quality management which will grow at 20-30%. The FIs love financials, and I don't know why, but 75% of FI investments are there in financials. So, yeah, so those, and the FIs are the biggest buyers. So financials might do well in the run up to the elections. After that we might see what to do, but for now it's the same old things.
All right.
All right, thanks so much for joining us today, Amit, and taking us through your views and clear strategy there ahead of elections on those growth stocks. Okay.